Hello, everybody. I'm your boss, Joe Boss, and welcome to another week ahead trade plans video. Man, oh man, oh man. What a move. What crazy moves we had today and yesterday and the day before. Nutty. I got a few messages today from people saying, what's going on with NFP? What's going on with NFP? I don't understand. It came in super high up and that should be bullish dollar, but it still went down and then it recovered. I'm going to go ahead and just pull up Bloomberg article here that pretty much goes over the majority of the primary reasons that describe what happened with the major move today here for NFP, so that we can get that confusion out of the way immediately and start planning for the week ahead, which because we've moved so much in a lot of these assets, we have to actually start looking at some monthly levels, some monthly charts like we did in yesterday's stream. Oh man, the seasonality is pretty risk on. We'll get into that in just a bit. So I believe somewhere around here. Yeah, I think this is the one. We can see markets trading on that theme today. That puts a June cut into play with confirmation from a low consumer prices print. All that is needed. Despite the beat of 275,000 jobs added, a huge beat, today's report had enough downside via revisions and a higher unemployment rate to see bonds rally. The 5-year yields going below 4% on the US side at one point. A June cut and 4 quarter-point cuts for 2024 were both priced in for a while. We've come off those levels now, but the price action shows a market looking for reasons to rally next week's CPI, and that's why we got the title of this stream, which is inflation here, inflation there. Next week, we're getting a ton of CPI numbers from all around the world. So next week's CPI in the US would give the market reasons to hold these levels. Consensus is 3.1% for US headline CPI and 3.7% for the US core CPI. If we get below, lower prints than that on either, we should expect 5 and 10-year yields to dip below the 4% level sustainably, and for June to be fully priced in for the first Fed rate cut, with average hourly earnings still advancing at 4.3% pace as last year. It is also bullish for a no landing outcome for equities and in general the market. So hopefully that clarifies things, and then this is just more of a breakdown of what occurred. Let's see here. Previous 2 months of payroll gains were revised lower by 167,000 jobs. So it's not necessarily the headline number that has helped the dollar maintain its lower values for it not to spike so significantly higher. It's that the revisions came in, and the revisions were for the last 2 NFPs, and the revisions were considerably lower. And now we have inflation in the week ahead here to think about. And the likelihood is that, inflation's probably likely going to continue to tick a bit lower. It did tick a bit lower, I believe, in the last print, or just stayed in the 3% handle. So we're gonna have to see if inflation stays sticky around this 3% level or if it actually starts making pace, which would give additional credence to the cuts coming in, getting more cuts in the second half of this year. Now, we're in an interesting scenario where if the next few months continue to show numbers improving the way central banks want them to improve, it's going to determine the number of cuts we get in the second half of this year. Everyone's pretty dead set on, okay, Fed's likely going to do at least one cut in June. And in March, we're also going to get the, I believe, summary of opinions from the FOMC and an updated Fed dot plot. And last I heard, expectations are that we'll probably only see the Fed put in 2 to 3 cuts in the dot plot. So depending on how dovish the economic data comes in over these next 2 months is going to depend on how many cuts I think we see going into the second half of this year, or at least what the preliminary probabilities and pricing will be going into the second half of this year will be. Alrighty. Here's the economic calendar. This has all of our inflation reports that you can see. We got some employment data that came out for good old Canada. Actually, let's go ahead and check out USD CAD. That one. Yeah, that one got stronger, looks like. Unemployment rate still stayed. It didn't reach expectations. It stayed flat. Unemployment change, well, the employment change rose. Participation stayed the same. Oh, hourly wages fell. Full-time employment rose. Part-time employment lowered. It's a pretty neutral view, in my opinion, for the Canadian employment figures. So no major surprises out of that. So it seems like most of the move here in dollar CAD was driven by the US employment data that just came out at the same time. And now we go into next week's section here of the calendar. PPI out of Japan, CPI, inflation data out of Germany. We'll see if that holds up or not. Consensus is for considerably lower inflation. That would probably send the... I think that'd probably still send the euro higher. There's some talk, if I recall here real quick. If I go to the Discord under central banks, there's more discussion of the ECB cutting ahead of the FOMC. Some heads of research and chief economists came out on Twitter yesterday and essentially at the same time as Holtzman went out and said rate changes may be in preparation. It started to make more market participants a bit more dovish, and then we got this report here. ECB odds for a June cut align with Fed. Markets had put European cut odds ahead of the Fed. So, yeah, people are getting more dovish, at least as of right now, even though it's just a slight measure. That may be the theme going out into the future. Maybe post FOMC, maybe going into April, that becomes a more important story, because guess what, if you're seeing rate cuts coming out of the ECB, then we're going to have to start doing research on, okay, if they cut, is this actually going to move the exchange rate? If they cut, is this going, it'll probably help their equity space. And if it helps their equity space, it'll probably drive more investment into Europe. So you would maybe assume some European focused investors, people who have divested out of Europe, may look at this and say, oh, wow, it might be necessary to acquire a bit of euro here, just so that we have a cash position in case this does occur in April, a cut from the ECB, so that then we can position in those European equities. So don't just think, oh, just because they're cutting, potentially if they do cut in April, again, this is a very, very aggressive view. But don't think, oh, just because they're cutting means that the euro is going to get particularly weak immediately. It might have an impact on European yields and bring the yields down, but also note that that will also loosen financial conditions and make it easier for businesses to prosper. It would help accelerate the rebound in growth over in Europe more significantly. And Forex is a game of relative change, right? We're trading pairs here. So if the economics in Europe begin to grow at a faster pace than the United States, and that induces a cut, that doesn't necessarily mean that the euro has to go down right then and there, right? So try and keep that risk in mind. Okay, let's get into some of these charts here and start looking at some of, frankly, these monthly levels. First, I'm going to bring up the XY. I'm going to bring up the seasonal forecasts first off, because there's something I saw here when looking at the seasonal forecasts. Give it a sec to load. It's loading decades worth of data here. So I pulled up the seasonal forecast. I'm looking at this and I'm like, oh, that's not good for the dollar. And then I go ahead and I look at the expected value. I'm like, well, that's still going to be pretty bearish next week, especially this 12th trading day of March, which is right here. This is actually the beginning of, I believe, 2 weeks from now. Right, so this is all next week, right? From the 7th trading day to the 11th. And then on this 12th trading day, that's March 18th. And from there, you start to see more sideways action, more positive seasonal expected value. So the seasonality looks bearish for the dollar going here into the next week. There is one value here and one value here, but they're still skewed a bit on the bearish side, at least in this first instance, skewed bullish a bit here on this 10th trading day. But yeah, I'd be cautious considering this negative momentum building up. Let's go ahead and look at our low odds here. We're now getting our low in a trough here, a spot where we have very low odds on the month. When I see something like this, when I see a slide like this out of a peak, it doesn't bring too much confidence that that's actually the low. So while this isn't a real trade, this is just a placeholder visualization for, hey, past here, I'm concerned about going down here, which is almost another 100 points or 1 point on the index. Not looking so hot there. And then still somewhere around here, I'd be expecting a low. So I don't think next week is going to be the week Um, maybe somewhere here out 2 weeks from now, I would probably be more optimistic about a rebound in the dollar. Let's go to. Actually, I'm just going to switch this on the daily time frame to look at weekly lows. And yeah, never in the last 34 years have we had relative to pivot points a low this low. So this is a once in a this has only happened once in 34 years of the data that we have here on the chart. Absolutely nutty, and it's really expanded pivots for next week. It looks fairly conservative, to be frank. A lot of lows are kind of off the open, and then you have some lows down here, and then you have actually quite a bit of tail here around the 100 area. However, I don't see a reason right now, just based off of inflation data next week, why we would move this low, unless inflation next week in the US spiked down to like the mid 2% handle. Let's see here. Let's go over to Bitcoin, because I am interested in seeing how that has performed today. No, it's just a nice little gradual move higher. How about gold? Well, well, this is where being prepared comes in handy. Over here, we talked about this being a risk going up here for the month. And then once we started trading up here, we were cautious about continued momentum coming into play. And we're like, okay, what's the next most reasonable spot for a likely high here? And we looked at this spot here in this 80-point range. Yeah, let's look at next week. Wow, a lot of tops next week for gold come in right around this spot. So it seems to me like I think gold might be losing some momentum here short term, in my view. I think gold might lose a tad bit of momentum preliminarily looking at this. So let's go ahead and maybe set an expectation here. Let's go to, oh wow, yeah, a lot of lows around here and a lot of lows around here. I don't think gold's going to pull this far back. So let's go to our 12-hour chart. Man, oh man. Crazy move on gold. Crazy move. So let's see here. So something maybe along these lines, I'd say. Up. Call that green. Put in the timestamp. And then I think I just want to focus on the closing odds here because I'm not terribly bearish. So probably a more sideways view. One more thing we can do is actually look at those seasonal forecasts. Yeah, you can see next week isn't so great once you get out to the end of the week. So up and down into the close makes sense to me, at least preliminarily. And Yeah, I don't know how high Bitcoin's going to end up going, but that thing looked like it still got great momentum considering it has successfully recovered from that dump. Someone dumped like $110 million worth of Bitcoin on this spike here. Someone who had been holding since 2010 dumped a lot of Bitcoin here, and the market just scooped it all up. We can check out ETH USD because that one has had quite a great recovery here. It's only got about 8 years of historical data, so we can't really rely on seasonal information. So, like last month, we have some data points here on ETH up around here, and most of our closes for the month are around here. So, if we're expecting some more significant bullishness somewhere up here, closing up here by the end of the month, makes sense. Otherwise, if we're expecting more nominal trend, something more sideways, range bound, it'd be somewhere over here. But I would not underestimate crypto or gold for that matter. Yeah, this is going to be nutty for gold. Wow. A lot. Most of the closes for March over the last 34 years are way down here. So this is anomalous. This is crazy. This is just straight up momentum. I don't see a reason why this thing would pull back so significantly quite yet. Maybe over the next week we get a bit more information. So I'm going to stay relatively chill on my expectations here on gold. But if any more good news comes out of inflation, if inflation does start to fall a bit, that'll probably put a damp on gold a bit. It probably won't impact crypto all too much because increased retail spending does help drive Bitcoin's price more and more. And as inflation falls and rate expectations fall, that makes money a bit more available. So that's going to help crypto in a way it might not necessarily help gold, because crypto is a much more illiquid market. If you have someone who's retail going into the crypto market, they have a maybe not necessarily in Bitcoin, but definitely in the altcoins, they have a bit more sway in creating some crazy moves, especially on those altcoins. Let's see here. Would you check out Gari USD, backed by Solana Galaxy, OKX, and KuCoin? Should I grab some? I can't tell you whether or not you should actually grab any. Let's see here. OKX. I mean, you say it's on OKX and KuCoin, so we'll go with OKX first. Yeesh, this thing's only been around for 2 years here. That is one crazy distribution. How about for the week? Well, that is here. You are here at the edge of the distribution on the lows for the week. I don't know if this is a particularly good spot because that looks like pretty strong negative momentum. You can see some recovery was coming in here off this likely low, and it just got kiboshed lower. So I'm not definitely too fond of this thing at the moment. You know, it's nice to see things when they rally in the altcoin space because that's just general bull season movement in crypto. But I think actually we should check out Pepe. Yeah, Pepe still going up and away. This thing has been insane. And Doge. We can look at the Binance one. And Doge is holding up there. Doge is holding up. So nothing too crazy in the altcoin space, in my opinion. Nothing too crazy going on yet. What else was there? We can check out the Aussie dollar. Wow. That was just such an insane move. 150 pips in the last week. Looks like it's recovering on the yield spreads here. Yeah, this is long-term lags settling in. Give it another week and these long-term lags should be gone, and then we will see how these yield spreads start to move, if they actually give us something here. Looks pretty mixed for the next week, but following that, it looks like a good seasonal trend. Real quick, I'm going to go here to the week, check out the weekly pivot probabilities. Now, when you have spikes like this that create huge movements, it increases the range, it expands the pivot points. And when you have expanded pivots, that actually can make interpreting pivot points less reliable, because the space between any two pivot points is much, much wider. So if you're saying, oh, well, I want to go long or short between any two pivots, well, now instead of that space between any two pivots being like 20 pips or 10 or 30 pips, now you're dealing with 50, 60 pip ranges. And that can draw a bit of uncertainty, because now you have to ask the question, do I go long or short? Do I enter? Do I exit at the bottom or top of these little bin areas, these areas between the pivots? Now, just looking at this flat out, it seems like most of the closes are along this line here. So nominally, most of the closes are somewhere around here seasonally, and continuously, yeah, it seems like more or less sideways. So maybe Aussie does have some minor pullback off the start of the week and then recovers into the end of the week. This seems to be the theme when I go and I look at, for example, Euro, or I look at any assortment of assets. It seems like dollar is going to make some sort of recovery early into next week, and then potentially give it all back going into the end of the week again. Given the change in sentiment has become a lot more dovish from central banks and a lot more bullish on equities. A lot of analysts in the equity space are still super, super, super bullish, especially on stuff like NVIDIA. Oh, NVDA, NVIDIA. NVIDIA made a new all-time high. It closed down 5.5% today, but people are still bullish on this thing. It's one of the largest red day prints in a long, long time, since probably about here. Yeah, this thing's just nutty. So people are still bullish on this thing, and I'm looking at this and I'm like, well, people are eyeing that $1,000 level and are just trying to chase that $1,000 level. Now, not everybody is doing that. There are some analysts that have, a whole bunch of analytics, a whole bunch of probabilities. They they're already doing their forecasts for next week and saying, yeah, it's probably still going to go up next week based on the things that we're looking at, based on how we expect NVIDIA to react to this economic data. But then there are guys who are like, oh man, NVIDIA is going to go to 1,000. I can get in a quick, I can buy a quick call here and we can head up to 1,000. I don't know. I just see too many people who get sidetracked by psychological numbers, and then they forget they're trading a real asset with real people behind it, and they lose track of looking into the reason why people are buying and selling these things. So don't get me wrong, 1,000 next week could still be in the cards, but there are people who are quite irresponsible with their expectations. Yeah, man. Usually you don't go that high, but this is not a usual time, to say the least. All right, let's go back to, I believe it was Aussie dollar. Yeah. Yeah, we gotta watch out for more upside. We really gotta watch out for these tail risk moves way up there. But nothing says that we can't get it. If things turn out well. I'm going to go back to this 12-hour chart, look at the likely lows based off the the probability pivots. Yeah. I'd be careful of any slides like way down here retracing most of this move. I'd be careful. A lot of the time it does retrace that move. And wow. A lot of highs are up here. A lot of highs are up there. Yeah, something like this can't be along these lines here. If I step that back by 1, step this forward by 1, there we go. And green for bullish. So yeah, maybe the momentum starts to taper now, but we still see a net positive drift over the week ahead. There is some good news coming out of China recently, and that's one of the things that has helped New Zealand quite a bit. Oh man, a lot of highs are up here. So 30% of the time the top comes in kind of right off the open. And the rest of the time it's just moving like a maniac. So I see risks based off these tools of going quite a bit higher here. Yeah. Something along these lines. And then there's risks of still closing way up here. Ay. This is going to be a difficult week for guys that are trading discretionarily, because you get 1 or 2 little bits of economic information and prices are going to be moving like instantly because the robots are going to be viewing that info. It can be hard. It can be hard discretionarily trading. It can be very, very hard. And it's, in my view, during a week like potentially next week, that a lot of miscalculations can come in. I could be wildly wrong on these expectations as I'm drawing them. I really think there's a non-zero chance that we get some particularly crazy moves. I just don't know exactly how bullish I need to be on, for example, expecting these lows. Somewhere down here makes sense to me. Somewhere around here makes sense to me. Because again, data here is just inflation, inflation, inflation. A lot of this is going to rely on inflation actually printing lower. Now, the consensus right off the bat, at least for the core inflation rate in the US, is for a core to continue going lower. The headline number expected to still stay above 3% here in the US. But apparently there was a leak by the BLS, the Bureau of Labor Statistics in the United States. They sent out an email by accident saying they miscalculated the last inflation report. But we don't know if it's they miscalculated it higher, they miscalculated it lower. So I have quite a decent deal of uncertainty around how these assets are going to perform going into next week, because most of it's going to rely on all these inflation prints coming out of Europe next week. Let's see here. Going into Friday. Okay, so on Friday, we are getting Michigan consumer sentiment. That'll probably continue to improve if I were to best guess. And then inflation expectations, that'll probably continue going lower. That'll be nice for the Fed to see. And then Monday, what's the risks on Monday? Oh, European inflation comes out. All right. So probably on good European numbers over this next week, Eurodollar continues to see some positive drift, and then into the following week as we get this bit of data, if there is a meaningful improvement, and it looks like meaningful improvements are the consensus at the moment, we get a continuation into the 110s, into the mid 110s over the next, I'd say, week and a half. Could I check the GAR network? Sorry, man, I'm not a crypto analyst. I kind of go over everything. I mean, you're free to hop in the Discord and post a couple of resources in the crypto channel, but I'm, not too interested. I've already spent my time researching into altcoin projects. I'm not terribly interested in spending my time reviewing altcoin projects. I'm going to spend that time reviewing outlooks for the week ahead in the group meeting tomorrow. Instead, I think that's going to have a wider impact on more assets, and potentially including crypto, depending on how they turn out. All right, let's go ahead and full screen this thing again. Let's get through Great British Pound, dollar. Oh man. What a call. We went ahead and identified this risk of getting our high way up here. Actually, sometime when we were over here, we were drawing these bits of analysis on the ranges, saying, hey, once you crack above this, there's risks of going way up here. And then once we got to here, I'm like, it seems very likely that we end up closing up here and getting our high up here. So the pound dollar was quite an interesting set of expectations and bit of analysis. This was an especially good call out on, hey, look, there's a risk here. Man, what being prepared does to your expectations and analysis, how that changes it. And I think at least for the better. wow, a lot of high. Yeah, I think this thing's definitely going to continue higher. This thing's probably going to go up into probably next week. Let's go ahead and look at some closing odds here. Well, a lot of closes around this spot as well. So, I mean, around here. At that point, it's pick your flavor, right? Gonna continue closing up, having a positive drift into the close, or a bit more of a nominal rebound lower. So we'll go with the nominal expectation there. Yeah, not a problem, crypto. Okay, let's see what else. What else? Dollar yen. Dollar yen still super negative on the yield spreads. While a lot of bearish closes down here. A lot of bearish closes down there. I'm just gonna set my bearish close expectation way down. It does not look great. This is an insane move. This is like 600 pips. This is over the last 2 weeks. This is insane. I mean, just from here to here is already 300 pips for the week. This is insane. To say the thing could do another 300 pips next week is, I mean, we kind of thought in the month ahead outlook that I did at the end of February, we were going to see some downward movement around this time. But man, this extra move lower on these negative yield spreads is, I think, going to potentially exacerbate the move lower. And at that point, probably give dollar some time to give a bit of a rebound here. Again, most of the time, the lows are coming in around here. Most of the lows are coming in around here. But man, that is one fat odd down there. I probably go with a more nominal expectation here at the beginning of the week. Oh man, so many highs up. This is going to be nutty. This is not an easy one to set expectations for. So I'll just go ahead and do my best. I mean, probably it's going to be even a bit more conservative. And then I really don't know how low this thing is going to end up going. Frankly, I could be totally wrong on these expectations. We could totally reverse this move, like, what's that, close to 200 pips, and trade all the way up here next week. I don't necessarily see that, considering these super negative yield spreads going on here. But this is why we look at our monthly levels and why I'm kind of prioritizing, hey, these monthly levels are looking important. Looking a bit important, because now we're in a trough. Very, very low odds here, very low likelihood that's the actual low for the month. There's still a probability that can be the low for the month. Real quick, let's look at these low odds here. Yeah, that's starting to look like a risk. And I think I did point it out in a stream, but didn't leave the drawing here, but that around here, essentially the 145 handle, sometime this month, that could be a risk. Yeah, and next week is horrible seasonally. It's super bearish as well. Oh my god, that 13th trading day of the month, it's bearish 71% of the time over the last 21 years. Yeah. This string of days in the latter half of next week are especially bad. Man. This could move quite a bit. This could move quite a bit. And it's very, very easy when setting these types of expectations to be wrong. It's very easy to be wrong on these sorts of expectations. Because essentially now all we're doing is saying, oh, momentum's going to continue and stop around here somewhere. But the truth is you never quite know when the momentum is going to reverse. You never know when something is going to come down the squawk and give you a new piece of information that updates your expectations into, in this scenario, a bad bit of news for people who are holding on to their shorts here would be anything hawkish from the FOMC. I mean, what if CPI, headline CPI rises and core CPI stays flat? That would be quite hawkish for expectations, and that would justify maybe a 200 pip rebound here on this pair. Yeah, it's important to understand the ramifications of how the economic data could change your expectations, and then look at the odds and figure out, oh wow, even though that's the likely thing, there's all these extra risks that could be coming into play here when you start to get really volatile, momentum heavy moves. It's very easy to be wrong on these sorts of expectations. But we'll go with this so far. We'll go with this. Let's see here. What else is there? I mean, there's crude. I believe that's CL, right? Well, looks like our bearish expectations are starting to unfold here on crude. Yep. Most lows next week are around here. And looks like our monthly expectation has been holding up better from the end of February on crude than a lot of the other charts we set monthly expectations for. So let's go ahead, put in a set of bearish expectations here over the next week on crude, somewhere around the $77, $76 handle. And let's look at closing odds here. Wow. That is sketchy. In a particularly terrible scenario, you're going to end up closing even lower than nominal low expectation. And if there is any sort of rebound for oil, that'd bring us up here. That'd bring us up here. Well, man, oh man. Let's go ahead and look at the monthly odds real quick. Yeah, a lot of lows can spike around this spot here on the month. Yeah, a lot of lows usually for the month are around here, but then once you cross the lows that we've currently set for the month, you're playing a falling knife game that becomes a bit more dangerous. Wow, that is a funky looking distribution. So when you adjust for contract changes, it looks super funky. I don't know. Not adjusting for the contract changes, though. It looks like most of the closes for a given month are around here. And then you have this tail here for the bear scenarios. So oil bears probably going to be looking at oil prices around the 75, 45 handle mark by end of month around here. Man, that is nutty. Nutty. It's really going to depend on how OPEC responds to the US pumping out more oil, frankly. It's really going to depend. Yeah, and there you go. A lot of lows around here. You crack new lows on the month. And most of the time, the low for the month is somewhere around here when you don't adjust for contracts. When you adjust for contracts, you're getting a different distribution because the historical data changes. So as your data changes on the chart, well, guess what? Your distribution is going to change. So another part of, hey, know what it is you're trading. And in this, so again, this is why we got to look at these monthly levels here. Yeesh, yeesh, yeesh. Yeah, so maybe a bit more to down there. The closing odds, yeah, most of the time are up here, but in this sort of environment, I don't think a rip roar rally for like $3 or $4 is in store at the end of the week. Look, the nominal expectation from what I'm seeing is something like this into the close. So most closes are somewhere around here. And then when you go and you look at the distribution, there's some overlap, right? Most closes are somewhere around here next week. I don't know what would cause that right off the bat, just looking at that calendar. I really look forward to reviewing the outlooks I've been sent here over the last 48 hours with the guys in the trading group. This is going to be a nutty week next week. These expectations I feel could get missed quite easily. Well, we'll see. Maybe there is some hope for oil at the end of next week. Actually, let's go ahead and real quick check out our seasonal forecasts, see how that lines up. It takes a bit to load. A lot of data here on the CL futures. Yeah, not good seasonality until you get into the end of the week, and then it seems like it starts to improve going into the end of March. So yeah, this makes sense. Some improvement going into the end of March lines up with this month ahead expectation, but not so much here over like the next week. Doesn't look so great. Actually, that's Friday, so pretty much leading up all the way into Friday. Seasonality is horrid on crude. I probably need to cover ES next. ES had a banger of a move up. We were actually not that far off from the closing. I mean, we were 13, 14 points off from the closing price on this expectation here, but I did not expect that sort of gap there. Obviously, NFP brought in that gap. All in all, things I would assume still look good for the week ahead here. Yeah, probably a more sideways-ish close, but next week there's risks of doing something like this next week, going up into the 4,300 channel. There's some risks of more pop here on the ES. Most of the time it's closing like this. Yeah, most of the time closing like this. But some of the time, when the momentum gets nutty, this is not a non-zero probability. Yeah. Just one more thing to make my job hard. Let's go ahead. Yeah, and you can see, all right, so I'm gonna go ahead and plop an alert there at like 52.80. I'm gonna draw a trend line here. Let's timestamp that. Put an up arrow. So above here, something like this into the close. But my nominal expectation is going to be something along, a down, and then an up, and then a drift lower into the close. Then set that to green for the bullish expectation. Set that to red for the bear. And then got to watch out on that front. Check out the low odds. Yeah, a lot. Wow, those are pretty good continuation odds right there. Yeah, pretty darn good continuation odds. What I view as a continuation odd is when, let's say I'm looking at low odds here, when 20% or more of the lows for a week or a month, for whatever the pivot period is, are above the central pivot, that starts to flash, hey, there's a continuation potentially there. There's a continuation where the low just comes in and stays above the central pivot for next week and can lead to a continuation of momentum from the prior week. Otherwise, I would nominally be expecting this, but considering most of the lows that usually show up for any given week are right around here. You can see 10%, 8.19%. So yeah, if you have more bearish expectations, maybe around here, you're looking at these seasonal odds and you're like, wow, that's also a risk I got to be aware of. But these continuation odds, yeah, this could be quite a nutty week next week on equities if we do get that continuation. Let's check out NQ real quick. And then when the stream after this one, unless anyone else has anything else they'd like to add or ask for. Let's see here. Yeah, a lot of lists. This is kind of a guessing game, but another situation where a continuation can come in right above 25% of lows above the central pivot. Wow. Yeah, this one's, I think, got a bit more upside potential. Yeah, the odds here for any given week just do not line up with these more expanded pivots. They nominally say that most of the highs are around here or around here. And once you go past this spot, you're dealing with a situation where you're trying to catch clouds, essentially, like the reverse of a falling knife. As you go higher and higher and higher, you're trying to grab on the clouds and just keep falling through your fingers. So, yeesh. Yeesh, yeesh, yeesh. Yeah. We can do the same thing here. Yeah. I mean, I would even set the nominal high expectation there based on the seasonal data. Not on the continuous data, though. Not on the continuous data. Let's look at the closing odds, usually, for the week ahead. Yeah, so even if you are getting your high around there, a lot of your closes pull back to around here over the week. So maybe something a bit more conservative on that expectation there. I need to set that to blue as a... There you go. But guess what? If the S&P moves as crazy as we pointed out just in the last chart. NQ is probably going to end up closing the week in the 19s, I would, or the high 18s. I would not be surprised to see us close up here. This is this can be very, very strong. It's a strong pullback here into the close, right? It's going to depend on how Microsoft and Nvidia, the likes of those types, hold up. But I'm just going to set some nominal expectation. Just up and down, that's the nominal. But above here, it's going to be a watch, because the thing can just run away up here. I have there's a risk of the thing freaking running away. We can check out the month. Yeah, a lot of times it likes to close up there. If we hide this, doesn't like to close up here all too much, but the continuous odds disagree. During bullish months, likes to close up here. But usually during the month of March, it doesn't like to. It likes to close more nominally in this area here. This could be a more bullish March than normal. Let's look at some monthly high odds. Yeah, there's a lot of highs around here. So the interpretation for the next week, the risks around the hierarch move, definitely in the 19,000s handle, definitely I think are valid concerns. And real quick, I'm going to pull up the seasonality here. And it's more moderate over the next week. And then going into the following week, so 2 weeks from now, that's where some spikes can occur. That's usually where the top for the month comes in, it seems. And then it's more pretty flat seasonal components come in. Man, it's going to be a nutty month to trade here. A nutty month to trade here. Okay. This has definitely been a bit more of an involved week ahead expectation, because we've had to take into account some of these monthly levels now that we've moved so significantly over the last week. And I think with that all said, I've pretty much covered everything I wanted to cover. So if you guys want to hang out in Discord, look at some outlooks, get access to these indicators, links into the description. There's a 10-day trial. And yeah, I got a lot of stuff to do today. So I'll go ahead and I'll see you guys in a bit.